Hi, welcome. What I'm wanting to cover today is just some of the critical points to think about if this is your first home. If you're a first home buyer, there's a lot of different aspects that you want to think about, and I'm hoping today to take you through some of those key points that are worth thinking about. Firstly, as a first homeowner, there are a number of government concessions and grants that are available. And look, they do differ from state to state, so I won't go into them in fine detail here. But a couple that are generally available is that there's a first homeowner grant where you get cash money that helps you facilitate the purchase or the construction of a new home. And there's also then concessions on the stamp duty costs of buying a property as a first homeowner. Again, depending on the state, some of those, they kick in. So as Queensland, for example, if the property's under $500,000, you pay no government stamp duty on the purchase. So that can be quite a savings and worth making the most of. So we're happy to guide you through that part of the process. The other thing to think about is depending on what sort of a deposit you've got. The way lenders like to see, lenders will borrow up to 95% of the property value for a first homeowner. But in Australia, as soon as you borrow more than 80% of the value of any property, the lenders want to insure their risk, and they make you take out what they call mortgage insurance, lender's mortgage insurance. Now, the important thing to think about this is insurance that purely protects the banks. You get no benefit from it whatsoever, but you pay the premium, and it's a once-only upfront cost. So I guess the bigger the deposit, the lower that premium is, and then if you're if you've got more than a 20% deposit, the lenders do not require you to take that insurance out at all. So, we find a lot of first homeowners, younger, starting off, they often need some of that mortgage insurance. But again, it's not as scary as it sounds, and we're happy to let you know what the cost is. A lot of the time, we can add that cost to the loan, so it's not cash flow that you have to take out of your deposit. But that's the way it is. As soon as you borrow more than 80% in Australia, the lenders are insuring their risk. So mortgage insurance needs to be thought about it. The other thing that lenders like to see in relation to your deposit, they like to see that at least 5% of the purchase price has been genuine savings. And they like to see that in an account. So part of the guidelines of documentation that we need to support a loan application, they would normally want to see 3 months of your savings statements. And they would like to see that money's accumulated over that time, and so you've at least got 5% of the purchase price to cover the minimum deposit and fees. Obviously, other money can come from gifts from parents, guarantees can be involved, but they just like to see that there's a little bit of hurt money in the transaction. Now, I touched on guarantees. We're finding they get really, where parents are able to help, that a parent can provide 2 types of guarantees. There's a security guarantee where mum and dad may have an investment property that they can put up as security that might help you avoid that mortgage insurance. And that become a real handy addition to the process. The other guarantee is a servicing guarantee. A little bit harder to get, but that's where perhaps on your income you can't get the loan you'd like, and so mum and dad can come in as part of that process with their income and help boost your borrowing capacity. So that's where the guarantees are involved, and there's a bit that needs thinking about that part of the process. The other thing is when you are looking to sign a contract and buy property, you normally need a legal representative that helps cover the settlement process for you. And so that's either a solicitor or a property conveyancer, and they just are your legal representatives throughout the process. And so they would, once we've got the loan approved, they speak to the lender to coordinate the whole settlement process. So normally before you'd sign a contract, you'd want to have spoken to your legal people, and they will give you some guidance as to the contract conditions you want in there. And again, this varies massively from state to state. But as a general rule, when you are signing a contract, you are able to include a number of conditions that gives you time to properly investigate the property. Now, obvious one is the subject to finance clause, where you can sign the contract, give yourself 14 days, 21 days to get your finance sorted, and the same with pest and building inspections. We strongly recommend that you get a property inspected by a building inspector, get a pest inspector in there to make sure you're not buying a lemon and someone else's problems, and you get all that checked out. Again, you can build that into the contract conditions that it's subject to a satisfactory pest and building inspection. Once you've satisfied all those conditions in the contract, then the contract becomes unconditional. And that's when there's no backing out from your side of it. So it's very important you speak to your solicitor before signing a contract so you get all those things covered and you get all those contract conditions. Now, one of the most important things, and obviously as a mortgage broker we think it's really important, is get pre-approval before you start looking. Obviously you want some idea on what you need to spend for a property, but pre-approval works this way. We would still go through the full loan process with you. We pick a lender that we think's the most suitable, and we would actually put an application in. That doesn't cost you anything, doesn't obligate you to that lender. But the lender goes through the full credit process, and what we do is we get the loan. The loan's approved, subject to you finding a suitable property and maybe the valuation of that property. So what it means is you can just go out there with much more confidence, and you can be a lot more confident that you've done your homework. Once you have found a property, it's then a very quick and easy process to get that to full approval. Now, the thing to be really wary of as a first homeowner is auctions. They can be daunting, and again, different states are more auction mad than others. Capital cities more so than perhaps regional centres. Now, the thing to be wary of with an auction is when you buy at the fall of the hammer on an auction, it's an unconditional contract, which means you've got to have your finance fully approved first. You've got to have done your pest and building inspections before the auction day. Because as soon as that hammer falls, you own the property, whether you like it or not. And the repercussions, if you haven't got your finance sorted and you've bought a property at auction, can get messy if you have problems with your finance. So auctions are something to be wary of. And again, that's where we can guide you through that process. Look, I've covered a lot in a very short amount of time, but hopefully it arms you with a lot more questions that when we speak face to face, we can certainly cover off on all of those, and I will go through those in more detail. Thanks for your time.